On the big sell-off today, Susan Lee of Fox Business joins us from New York. Good evening, Susan.
Good evening, Brett. A three-week low for stock markets, and despite the extraordinary actions taken by the central bank, its chief still remains cautious on the economic recovery.
While the economic response has been both timely and appropriately large, it may not be the final chapter, given that the path ahead is both highly uncertain and subject to significant downside risks.
A broad-based sell-off today led by businesses that depend on the performance of the U.S. economy: energy, industrials, consumer discretionary, and financials. Investors had anticipated that interest rates may fall into negative territory this year as another form of stimulus to help a shrinking U.S. economy. While President Trump is on board, Chairman Powell isn't.
It's an unsettled area, I would call it. I know that there are fans of the policy, but for now, it's not something that we're considering. We think we have a good toolkit, and that's the one we'll.
I disagree with him on one thing now, and that's negative rates, and only because we're paying zero. Good news, with this money you're talking about and the stimulus, we're paying zero. We're down to zero interest. That's good.
Airlines had another tough session, tumbling to their lowest in 7 years, as a global industry group warned that demand for flights will not recover for another 5 years. A looming consumer overhang that makes the explosive stock market recovery since the end of March look overdone.
I would say that, 99 was more overvalued, 99-2000. But, yeah, I would say it's one of the most overvalued markets, maybe the second most overvalued I've ever seen at that day.
Stock values relative to future profits on the S&P 500 are trading at the most expensive levels in nearly 20 years, according to Dow Jones data. But given the unknown path of the coronavirus, Wall Street experts say it's very hard to judge. Brett?
Too late now. Susan, thanks. There are growing concerns tonight.